Hello, everyone. Today is January 26, 2023. I'm still with a lot of cough, so before I start the video, I wanted to apologize if I cough too much during the recording of this video. Anyways, remember to check the description. There are some links to Discord and also Apex if you want to take advantage of a 50% discount these guys are running now. That would be probably a good idea for you to do. Okay, let's start with the coughing then. All right. So trade for yesterday, only one, and I'm gonna explain why I took this trade. So if you see here, I do have Crude, and let's go back to ES. So ES yesterday has a overnight move to the downside right here. You see I have the 30 minutes chart. All the moving averages here are stacking to the downside. So when the market opened, I took this thinking that it was going to keep going down, and so I took this break. If you see, after the move, the overnight move, then there was one before last push down that formed a pivot right here. Okay, so since the market was already a little bit extended, I didn't take it, and then I let the market form the high on the 30 minutes. So it went up here and then it started to chop around in this area and broke right here to the downside. However, we were still above this pivot low right there. So I did not take that broke because this one is not a significant low. So it's another significant pivot, but then market came back up to that same pivot right here. You have there, and I marked the entry right here. So this entry was a week out of the moving average. In this case, it's the 18 EMA. And so that one gave me $370 in between the two contracts. So that was the only trade I took yesterday. Now the market has started to move to the other direction here. And so all the way from here to there is what I consider a counter trend. So I did not take this one. Sometimes I take them, but market went down and reverse to the upside right there. So I let it go this time, and I didn't trade. Because you never know when it's going to come back, right? Then in the afternoon, finally broke to the upside and moved a little bit higher. But if you see here, there was some really not that much of setups unless you're taking every single break, and which I don't do, or every single week, which I don't do. So there's no settings for me in this area right here. There was a you can consider this one, this area here, a break, because you're forming two tops, two bottoms. So that one could have been a valid break. I let it go. With the market the way it has been, very choppy and erratic at these levels, then I prefer to stay away. $370 per account, that would be great. I told you that I was going to add one or two more accounts, so I did, and let me show you. I'm playing now with 6 accounts, so mine and 6 more. So I have 1, 2, 3, 4, 5, and this is the result for today. Yesterday is what it was, $370 per account. So that is that. Okay, so nothing else for yesterday, and I think that I was clear why I took that trade. I'm sorry. I keep asking for Okay, so let's go to today in Crude. So I started the day in here. So Crude, the first trade I took was at 8:17 a.m. So normally I start doing my analysis by 8 a.m. A little bit before. So at 8 a.m. I have a good idea, and I saw that Crude was moving to the upside. Now it had moved already from from the 80 levels right here all the way to, so from 80 all the way to um 81.55, so a dollar and something from the lows. Now I draw this channel right here from these tops all the way up, and I was visiting. So in the first trade I thought that it was visiting the meat, kind of like we were. It is not really a good location to trade, but I took the trade anyway. So I moved the channel anyways. So I took the first trade here. What I saw was this formation. You see that it's moving up, then coming back down, make one there, and then try to break again. Momentum in here was below the 25 line and moving higher. So I took that first trade right here, and I was immediately punished on the first contract. So I kept $120 per contract, which is the maximum loss for me in the one in the two size brick, which is that one there. So I took the first the first one was a loss, so it was $240 against because $120 per contract. Now I re-enter it. So this is something that I normally, if I'm fighting the entry, sometimes I do it. I saw this formation. You see that there's 1, 2, 3 white bars, and then you have a break again. So I took that break, thinking that it could go all the way to the upper side of this channel. Now it went to one target here, and then came back down right there to that level. So I made $100 on that one there only. So one contract for 100, and the second one was sold at break even. Now then it went all the way down, and there was at 8:30 there is another trade I took right here. Right here at 81.35. So what happened in here is that I saw that it was crossing the moving averages. Momentum is not ideal, but it was crossing as well. So what ideal I mean that, if I see a formation of the lines that are touching the zero line and then moving up, that is probably a better indication for me. So like this one here, right? So that one went up, came back, and then formed this one red line right there, and then came back up right away. So I took this one at that level right here, and then the first target was sold at that level there. So that is another $100, came back down and stopped me out for at the same price of the entry. So now I am $40 down in between the three trades. So 240 negative on the first one, 100 on positive on the second one, and 100 on the third one. Now I gave it one more try. So again, same formation here, right? So you see that, and then you take that one. Now in here I saw that white line again, up, down, and up. So I entered it there. Hopefully you can see it. It's a little bit congested there. So again, so That one was one target. Stop me out. Up, down, up, enter. Right. So I entered it here. Now the distance in between this is lesser than the distance in between that one there. You see, so the more the farther you are from resistance, the better. So I do have resistance in this line here, which is part of the VWAP, the two standard deviation. So I took that one there, and then the first target went off at $100, and then the stop came back down here at $140 on the second one. So that trade gave me in between the two contracts gave me $240 right there. So right now I am at $200 in between these four trades I took in Crude. Okay, so those are the trades, and then I didn't keep trying in here because I was, looking at resistance, and this is not the best location where you want to enter. It could go higher, but I'm on top of the channel. I would prefer the channel to come back, or the price to come back to the lower side of the channel and then bounce again, but it didn't do it. It didn't do it right away. It came back down right here after the market opened. So this one, you see, there's a good choppiness here. So consolidation basically, and then came back down. Now I was looking at that level, but we are not above the moving averages yet. So me, I'm gonna let it go for now. Okay, so now you see that it didn't. We are not above the moving averages. We are below the moving average. So Crude had a move to the downside, and I didn't participate. There went to the VWAP and then kept moving down. There was a very nice move right here. Now we are forming a new low. I did not take it. I did not take it. Basically, because if you see the 30 minutes, we are this is counter trend. It went and moved all the way down here. This candle right here moved all the way down, but it was breaking all the moving averages. But you have moving averages stuck to the upside right there. So not a good I'm very conservative now because of the how the market has been moving, and so very conservative. Anyways, so that is Crude. Now I took one in gold, and this one here could have been much better. I didn't trace it. I didn't trail the whole move, but Crude was losing it here. I mean, gold was losing it here. I still have this one. I'm gonna take this one to local. So today gold was moving down on the 30 minutes, right out of the market open, and also making lower highs and lower lows in the overnight. So let's review the one trade I made. And it was kind of like a long short run. Anyways, it was $140 only. So why I took this trade? There is here a low, if you see that that is a low, that one is a low. So so I do have a significant support right there. Maybe this one is better. Right there, right? So market came back up. I gave one entry there. I did not take, and then another entry right here. Now this one was a week out of the moving averages. I did not take the week. I took I took kind of the breakout of this channel. So that line right there, right? So it was breaking down right there. This one was good for one target, and then came back up in there, and then now it came and broke with force all the way down right there. So that break would have been really nice to take. I did not. Let's look at the momentum. Momentum right here in that entry was above the 25, but negative. And then you have one batch or one heel, and then a lower heel. So your momentum is going with the direction of the trend. Negative and moving down. Now in here you are already above the zero line, but then came back down. So that one would have been a really good entry, not at that level maybe, because the moving averages or the fast and slow line are kind of touching the zero line, but it's a little bit above. Now the break on this one would have been formed probably with that low there, and that would have been a good entry. Again, I'm very, very conservative. I don't know where the market is going. It's it's at levels of resistance, I would say. And you see here after that move, look at how choppy it was, all the rest in here, and then came back down. So yeah, there were some other opportunities. I did not take it. So again, today was $340 per account. So I think that I'm happy with it. So I had a question in the Discord channel. Why do I take several contracts instead of doing a one contract, one account with multiple contracts? Okay, so you distribute or reduce your risk per account. So if you lose $100, let's say, when I make a $340 in, for example, in this little move here, this one multiplies for, in this case, 6 of them, which is around $2,000. So which is pretty nice. Now, when you move to the downside, if you have these accounts with Apex, and then you are losing $120 or 240 or 120 per contract, then each contract belongs to one account. So you are actually, since you have a daily drawdown, you are distributing that risk in between multiple accounts, which is pretty nice. So that's why I have several accounts instead of only one where I put all the trades there. Now, the other thing is that I use the Apex Trader Copier, which allows me to manage only one of the accounts. Okay, so in this case, I'm managing the first one right there, and then I duplicate the rest of the accounts for what I do it. So I manage only one. It's not that I place orders in each one, in every single one of them. So it's very unmanageable that the way that you it's very unmanageable if you do it that way. So that's why I have a replicator. You go into one, and then and then the other ones are replicated and produces the whole thing. So it's same thing for stops, entry. So all the orders are replicated in the other in the other accounts, in the follower accounts, I think that they are called. So you have a lead account, and then you have a follower account. All right, so that's the review for today's trades. I hope you like it, and be conservative. Don't try to be the big shot and overtrade and try to you get your money, and then you hang up your code or take your code up and you continue doing other things, and that way you preserve your capital. So make sure that you put a low, reasonable target, and try not to break it, or try not to reach your $3,000-$5,000 in multiple trades, because the more you trade, the more you are exposed to risk. All right, take care of yourself, and see you next time.